The shares of Lyft really exploding to the upside here in after-hours trading following their most recent earnings results. We're looking at gains of just about 12%. The big driver here, it's all about guidance. Q3 revenue guidance coming in better than expected. Lyft now sees revenue of $1.13 billion to $1.15 billion for the current quarter. The estimate on the street was for $1.08 billion. Lyft also sees adjusted EBITDA of $75 million to $85 million, blowing past expectations of just around $47 million. For the second quarter, adjusted EPS coming in better than expected at 16 cents. The street was bracing for a loss of about a penny. Revenue in line with expectations, $1.02 billion. Active riders, a metric, a number very closely watched here from the street. That was up 8% from a year ago to 21.5 million. And also beat the street's expectations of 21.1 million. One data point here that did come in a bit light, a bit short of the street's expectations here, Diane, and that's revenue per active rider. That came in at $47.51. The estimate was for $48.52. We know Lyft has been lowering its prices in an effort to win back some market share from Uber, who is by far the leader within this category. But again, the better than expected guidance for the current quarter, also the beat that we're seeing on profit adjusted EPS of 16 cents for Lyft. That's a big reason why we're looking at shares up just over 12%.
And it's interesting to see the reaction, especially when you mention Uber. You'll recall when they reported their results, there was a knee-jerk sell-off initially of their results. When they were expected to post a loss at the time, and they certainly have a larger market share when you compare, relatively speaking, because at the time, Uber had posted a profit of more than, or revenue rather, of more than $9 billion. They posted their first ever operating profit, and the reaction was negative. Meanwhile, on the flip side, here with Lyft, you're seeing investors like, okay, we're on board with this one now. But it does go to show with both companies that you are seeing that ridership come back, that post-pandemic ridership, people clearly using these services between whether we're talking about business or leisure travel, or people going back to offices, companies calling people back in. So you're seeing that with demand with both of these companies.
Yeah, and there could be some talk about whether or not maybe this is the start of a turnaround for Lyft, because like I said before, we talked about the fact that Lyft had been lowering prices in order to boost their ridership numbers. And it's clear from these results, 21.5 million riders, up 8% on a year-over-year basis, beating the street's expectations. That strategy clearly working to some degree. Within this report, the CFO of Lyft, Aaron Brewer, saying that the rideshare market is growing. We had a solid second quarter, and we have strong ride momentum going into Q3 and the back half of the year. So again, at least the street initially very impressed with these numbers, with the stock up just about 14%.